If you want to identify the highest probable order block, this is what you have to be looking for. Right over here, you guys are already more familiar with this model, the consolidation, the break of that consolidation, and that optimal reversal, usually at price getting at a higher time for POI, and then you look to find some sort of order block within this range. However, we can take this a step further and wait for price to create a leg to actually retrace off of an order block within this area, but not the order block that is within the premium price. So what we usually find is that this order block would be either at the extreme of the Fibonacci level if we were to draw it from the high to the low, and you see that price retrace to a level where it is not at the optimum, but it maybe just reaches the equilibrium and then starts pushing off. What this does, it allows people to forget about this main order block right over here and start to focus on this leg, as this has created that breaker structure. So people will be more inclined to look for order blocks within this specific leg, but not you. You are going to be patient and you will wait for this extreme to either be filled or for it not to be filled. The same goes for this model here, this exact same, where price sweeps out liquidity, creates a change of character, and then now instead of fully making that new low, price instead starts to consolidate. And what this also does, it accumulates orders just before price arrives to this premium order block, and this is where we'll be looking to enter. So if you're focused on this order block right over here, you won't be manipulated by any demands that are created from this, because to other traders, to other SMC traders or ICT traders, this will look like a change of character or a market structure shift. So they'll be focused on any order block created within this leg right over here, or any fair value gap created within this leg. However, as I said, you want to be focusing on where price is coming from, this origin and this low, and you are focused on this extreme zone right over here. But you have to be patient. You have to wait for price to start printing out this other side of liquidity, okay? Because here's the one side of liquidity, but you need this other side here to give your order block even more probability that it will actually reverse from here and not that it will fully get liquidated from your orders. Now this is just an example of this being shown on this chart. We can see here is that liquidity that is created that we all usually look for. Price creates that change of character, right? But now it's what we start to look for after the change of character. As you can see, price breaks another low after retracing to the upside, and it doesn't really come into this extreme zone right over here. It instead reverses off of this indecision candle. All right, so now the other traders will be focused on looking for order blocks within here, so they'll be focused on this zone right over here, and you can see how price will reacts off of it. So then again, you can see that inducement, how it induced people to sell, right? But now you see what happens as price keeps on continually tapping here. It is accumulating liquidity, and is also accumulating liquidity on the downside. You can see right here. So as price is driving up here, we're still focused on this zone, and we set our limits at this area, and we can see that price comes in here, sweeps out all this liquidity, okay, and then it starts to reverse in its intended direction. This is yet another example of this. It's that same scenario that we always look for, the sweep of some equal highs, the change of character, and now this is the order block we should be focused on. But price wants us to forget about this main order block. It wants us to start focusing on other continued market structure. So they'll then break this low, create that breaker structure, all right? And then now people are more focused on zones like this, as you can see, and look how price starts to retrace off of that zone. Also, I do even add more probability to this previous model is that if you start to see how price starts to react off of these inducement zones, as you can see right here, price gives a quick reaction, so that is getting sellers in, so that is even accumulating more orders right over here, as you can see. And then what price does, it completely reverses, comes to this area, this premium area, and then continues the actual move down, targeting that liquidity. Okay, we can see here, everything here is efficient from the left side. As you can see, price creates this break structure, but it is only because price is now tapped into that extreme supply zone. Yeah, price did not tap into that extreme supply zone, instead just broke structure. So we can assume that this will be an inducement high instead of assuming that this is induced by acquisition, you can see that has mitigated previous orders. And here is our last example. This is even a continuation of this. We can see how fractal price actually is, because on the higher time frame, this is a higher time POI, right? Okay. And look what price does before coming into here. It starts to create that liquidity. So it is accumulating orders, and then it starts to push down, breaking lows. So now it is inducing sellers into the market. So they will be considering entering right over here. Price gives a quick reaction down and then liquidates them out. Okay, now we have that liquidity, and here is actually the character, so that normal model that we usually look for. But now, instead of waiting for this premium zone, people also start looking at zones like this right over here. And that's why you see I actually name it as supply inducement. Furthermore, from that, price then creates a breaker structure, then inducing more people to come into here. So now we have a supply inducement right over here and a supply inducement right over here. And then gives that quick reaction. So even more liquidity, showing that people want to now start entering. And then a quick reversal up, coming to that extreme zone, and then it starts to continue lower. So I hope you guys can see, and now you open your eyes to the market. You have to be patient. The only way that this model will actually work is if you are patient and you look at what price is printing. So now I want you guys to focus on what GJ is printing here. Okay, so we can see previously GJ took out these lows. So the liquidity that was being accumulated here, it took that out. Price then pushes up, breaks this high, creating that change of character, and it gets people interested into buying over here, and then liquidates them once again. So we can see here we have seen that liquidation. But now look what happens. We identify here is our extreme order block. This is the zone that we usually look at when price breaks high. However, price then makes that short-term retracement and pushes up, creating that breaker structure. So now what happens, people now start focusing on these areas, right? And they'll start placing the orders here. Price then accumulates orders right over here. But I can sort of see that this is liquidity. But even so, more people might have actually been interested into getting at zones like this, okay? Getting at zones like this, and then continue that move upward. But we are still patient. We are still looking at this order block, okay? And look what price does. It then liquidates orders, or people did not cash out their profits at this high. It quickly reverses down. And then it's still continuing this trend. It then sweeps out the lows, breaks the upside. People are looking to target these highs, and they don't get that. Instead, price reverses back down, creates another change of character. So it is now getting in even more SMC traders into looking to enter here, creates that breaker structure. More buyers are being introduced in this market, and then we finally get that full drive down in price. As you can see, price drives all the way down, okay, sweeps out all this liquidity that was being constructed right over here, and it takes out this low. As you can see, even when price comes to this area, you can see it gives sort of a quick reaction and then reverses back down. But now for you who is waiting for this extreme zone to be mitigated, we can now see that price comes into here and starts reversing to the upside. This is yet another example, but now from the sell side. What happens? Price creates a change of character. But even before that change of character, we can see that there was a liquidation of liquidity. As you can see here, lower time frame, further on from here, we now create a breaker structure. So we don't tap in to this extreme zone. Instead, we create a breaker structure. So what happens? People now focus on the most recent price action, and they start focusing on getting in sell position right over here. So we do get that initial movement. So now people are interested in even selling or further. To even more add to this, we create a change of character, and people now be looking at this. So they see this as, okay, price is bearish. We have now created that breaker structure. More so, even before this, we created liquidity, okay? We created liquidity, swept out that liquidity. Now we have that model, and that's where they will enter their sells in, and then they would lose the trade. So it's not about the actual model that you're losing out on. People from this point, they start to say that that simple model of liquidity and then changing character is not sort of working, but also about the location. You have to look at where you're actually taking this from. Remember, this extreme zone is still unmitigated, so you have to be wary. You have to understand, if you are going to take a trade from me, you have to understand that you do have the higher chance of losing and being liquidated and seeing price come to this zone. And even so, you can see from this zone that we're even creating liquidity among the highs. We're creating this trend line liquidity where price is now inducing sellers right here, inducing sellers right here, and then once again inducing sellers, both retail and SMC. Okay, so we can see how the liquidity is being built up from here. But if you're waiting for this extreme zone, you can see that now price comes to here and then starts giving you a clean model to enter off of. Even so, giving you that change of character once again, and then that order block looking to target low. So guys, that is the way that you can identify the highest probability setups. It's not just by looking at the liquidity and looking at that strong impulsive move. It's looking at the location where this model is even being set up, because if it is not at a zone where the extreme order block has been mitigated, you'd stand a higher chance of losing the trade, as with this example right over here. It was a very good high quality setup, but looking at it from a macro perspective, by scaling out, we can see that price does run the chance of coming to this extreme zone. So you who are patient for this extreme zone and don't forget about it and don't let prices drive you on, you will end up seeing that you get paid a lot more. That's it for me, guys. If you want to also see a more in-depth detail into how I use this model, you can check this video out over here.